Head of Research, MarketSmith India. Mayuresh, welcome to NDTV Profit and this Women's Day party we're having here, but everyone's invited, so great to have you on as well. Tell us about what you think in terms of the recovery we've seen in the broader markets today. After 2 days, I would say about 48 hours of uncertainty, a bit of nervousness, regulatory action, etc. Is this now short covering, or are you seeing a realization coming in that perhaps it isn't that harsh?
Afternoon, Tamanna. Afternoon, Neeraj. Wishing you, the entire team at NDTV, all viewers and women all across the world, a very happy Women's Day. You guys literally rock. Coming back to the markets, I think the entire perspective about the broader markets having run up a little bit too much, that probably leaves very little room in terms of any error or omissions that the broader market stocks can deliver. So if there is any miss in terms of any earnings estimates going forward, I think the correction can be equally brutal and sharp. And therefore, I think the entire perspective in terms of the risk reward probably staying with the large caps at this juncture, as we are hitting all-time highs almost every day, probably looks to be a better scenario. Looking at the various optionalities in terms of the earnings trajectory, the expectations of macro and micro developments, where key pivot levels lie as per MarketSmith India, and where the overall valuations probably are positioned as well. I think large caps at the current juncture probably offer a better risk reward in our opinion. And therefore, I think selectively within the mid-cap universe, one can probably look at spaces like road companies as an example on your watch list within the entire cap code manufacturing infra theme, hospital ancillary stocks as an example, or even auto ancillaries very, very selectively. I think that is where our expectation is that the EPS growth might continue over the next few quarters. Financials generally have held up pretty well, specifically the large cap names at this juncture. And obviously the premise and the underlying pinnings that probably happen for this sector with the expectations of a rate cut at some time in the second half, a strong recovery that can come through, both in terms of advances, deposit growth, and therefore maintenance of NIMs coming back to normalization levels and earnings trajectory improving in FY25 is probably keeping the large cap financials in better stead compared to the smaller names at this juncture. So a little bit skewed towards large caps, Tamanna, to answer your question, and very, very selective on the product.
This tug of war between falling international prices versus this value that Tata Chemicals carries in its plate of other investments, what weighs higher?
At the juncture, I think value of other investments is weighing higher, Neeraj. But I think the market will at some point revert to how the core business is expected to function, because that's the base case in terms of how the functionality will probably ensure earnings growth will happen. And you're absolutely right. If you probably look at the latest quarter, soda ash, both pricing as well as volumes were significantly lower because of lower demand across geographies. So except the Kenyan market, I think the US market, the UK market, and even the Indian market has suffered both in terms of price erosion as well as volumes. Again, there was a plant shutdown, a planned one in the North American markets. But even to a large extent, I think the recovery probably seems only after a few quarters. The sodium bicarbonate business also is struggling. I think the volumes were a little bit better quarter on quarter. But again, pricing is becoming a big issue here, as well as the salt business for Tata Chemicals. So to that extent, the kind of capex plans that Tata Chemicals has lined up, they've got 500 crores to probably go through for the remainder of this year. And again, a huge capex of almost 2,700 crores spread over the next 3 years, where they're expanding capacities quite significantly, both in terms of soda ash, sodium bicarbonate, and they're doing the silica business almost 5 times where it is at this juncture. So to that extent, I think the net debt at a net level has gone up to almost 4,400 crores, and the core business is still expected to take a while before it recovers and start showing some element of earnings respite. So I think at this juncture, Neeraj, it's all about Tata Sons, the investments in other assets, but the core business is clearly struggling as we speak.
So, I mean, soda ash prices, I think, is nobody is concerned. It's just a whole different kind of a situation going on there as far as Tata Chemicals is concerned, one supposes.
Mayuresh, today a bit of a U-turn in some of the stocks which were getting badgered the last few days. I think we spoke to Suzlon and JP Chatsani kind of, at least in his comments, led us to believe that for the next 3-4 years, this change of bidding mechanism, even if it happens, doesn't impact the company one bit because the quantum of orders already given out are to the tune of 27 gigawatts. I mean, who will execute these? So, in some sense, the change that we see in a Suzlon and Inox Wind, etc., does it inspire confidence, or would you want to wait on the sidelines for the time being?
No, so I'll wait out for Q4 numbers because a large part of the move, Neeraj, has taken place. And you're absolutely right. I think the quantum of orders that have probably come through, the kind of fixed asset turnover that one expects from these companies, at least in the near foreseeable future. So if you start discounting the next 2 years in terms of revenues, working at 100% capacity, I think the orders are going to suffice at the margins at which these orders have been given out. So to that extent, I think even if you roll over FY25 numbers, they are still going to look very, very strong year on year over the next couple of years. And therefore, I think the kind of earnings stability that one expects to come through will sustain for that periodicity of time. What happens thereafter is something to be seen because of the new mechanism which has probably come in. There might be some curtailment or some clawback in terms of earnings estimates if you start rolling over post 2 years as well. But I think over the next 2 years at least, numbers are safeguarded for this place.
Just another sector that has completely been sparkling today, Mayuresh, in last few sessions actually, is the metals pack. Even today, from a JSW Steel to, of course, a Tata Steel, a Hindalco, all of them showing quite a good, boost up. What do you think the reasons are fundamentally, and can this sustain?
So I think two aspects, Taman. I think what the market probably believes is some element of a huge stimulus at some point, which everybody's expecting to come through from China, and some recovery happening as far as the Chinese real estate market is concerned by the end of this fiscal. So as the rate cut scenario starts coming through for most global markets in the second half of this calendar year, there is expectations in terms of some support mechanism that the Chinese real estate market will get. Now, if that probably happens, and a combination of both these factors, with the kind of inventory levels that are across the metal chain, whether you talk about ferrous or non-ferrous, they're absolutely at low levels as we speak. So as demand starts clawing back very, very steadily as far as China is concerned and the rest of the globe as well, the metal prices on LME will start moving northwards. And as that starts happening with restocking taking place, the moment can be even sharp. Now that reflects directly in terms of how the realization aspect is played out for Indian companies as well. So higher LME prices, stable volumes, at least in the domestic context, stable input costs will mean that a huge element of operating leverage starts getting played through for most metal companies in this context. And therefore, the earnings scenario will start looking better over the next year as well. So to that extent, I think there are these tailwinds that the market is probably working on. How does that translate into numbers? I think Q4 will be a totally different story.
All right. Thank you so much, Mayuresh, for joining us.